Welcome to this explainer. Today, we are looking at an absolutely massive shift that's happening right now. We're going to explore how the heaviest, most historically physical assets on planet Earth, I'm talking about our buildings, our infrastructure, our very energy grid, are literally being transformed into liquid, machine-readable code. It is an incredible evolution in how wealth is structured, and it's super fascinating to uncover exactly how this whole thing is playing out. So let's just dive right in.
$326 trillion. Just let that number sink in for a second. That is the estimated value of global real estate. It's the single largest asset class in the world, and it represents an almost unimaginable amount of wealth. But, here's the catch. The vast majority of this wealth, it just sits there, completely trapped. It's locked up in these incredibly slow, paper-based, highly illiquid structures that honestly haven't really changed in decades. Getting your hands on a piece of this market or getting your money out of it once it's in remains a massive, massive friction point.
Here's a quick roadmap for our explainer today. We're going to start with the real estate liquidity problem, look at upgrading the traditional REIT, and spot the pioneers of property tokenization. From there, we'll dive right into the smart contract magic, explore the deep-in infrastructure frontier, and finally, we'll ground ourselves in the untokenized infrastructure reality.
So, part 1. The real estate liquidity problem.
Picture this, right? Imagine a large hospital pension fund. If they want to buy or sell U.S. Treasury bonds, they can literally do it in seconds. We're talking instant liquidity. But if that exact same fund wants to acquire an equivalent stake in, say, a commercial office portfolio, well, they're looking at months of agonizing legal work, millions of dollars in minimum commitments, and they basically just have to accept that their capital is going to be locked up for years at a time. The friction here is just staggering.
Moving on to part 2, upgrading the traditional REIT. Now, the traditional U.S. REIT model, the Real Estate Investment Trust, that was a great first step. By 2025, it was successfully managing over $4.5 trillion in real estate assets. It definitely democratized access, right? But it kind of hit a ceiling. Public REITs suffer from all that stock market volatility, frequently trading at really steep discounts to their actual value. Private REITs? Well, they avoid the public market swings, but they slap those lockups and high access barriers right back on you. And both of them remain geographically constrained, all while dealing with painfully slow paper-based payouts.
So when we contrast this traditional finance model with tokenized finance, a completely new model emerges, and that's the RE token. It preserves that brilliant economic logic of a physical property actually generating real cash flow, but it radically upgrades how we access it. Instead of those opaque quarterly payouts wrapped in slow paper processing, the RE token gives you instant automated distributions directly to a digital wallet. It's globally accessible, and the whole thing settles on-chain, almost instantly.
Let's check out part 3, Pioneers of Property Tokenization.
There are actually 3 main platforms really leading this vanguard right now. First up, there's Lofty, and they focus on single and multifamily homes. They allow fractional ownership for a minimum of just $50. But here is the real game changer with them. The rental income is distributed to investors' wallets every single day. Not quarterly, but daily. That means your capital starts compounding from day 1. Then you have Realty. They focus on Detroit residential properties, and they essentially forge the legal blueprint for this whole space by tying the legally enforceable Delaware LLC standard to an Ethereum token. And finally, Proppy, which attacks the actual transaction friction itself. Back in 2022, they closed an NFT-based property sale down in Florida in mere minutes, a process that normally takes 30 to 60 agonizing days.
Part 4, the smart contract magic. Okay, so just how seamless and intermediary-free is this flow of capital? Well, think about the traditional world. Rent bounces from property managers to administrators to banks, taking weeks and bleeding fees every step of the way. But on-chain, the tenant's rent payment just hits a smart contract. That predefined code instantly calculates everyone's proportional share, and boom, the funds drop directly into the investors' wallets in seconds. If you own exactly 0.1% of the tokens in a building, you receive exactly 0.1% of every single dollar of rent. No human trust required.
But, as you know, the technology is really only half the battle. It's super fascinating to see how the global regulatory puzzle is actually being solved. Delaware's flexible LLC statutes have kind of become the de facto U.S. standard, but Wyoming, they're pushing the envelope even further with their DAO LLC, which actually allows governance, like, voting on property acquisitions, to be encoded natively right there on-chain. Over in Europe, the MiCA regulation provides clear security status, though it does remain quite complex to structure. Meanwhile, Singapore's Project Guardian is actively testing tokenization with major banks under familiar English common law.
To actually navigate all those competing legal systems, the industry uses this really clever workaround. It's called the 2SBV Global Standard. Basically, you set up Special Purpose Vehicle 1 locally, say in the state or the country where the physical building actually sits, so it fully complies with those inflexible local property laws. Then, that entity feeds its rental income to SPV2. SPV2 is the token issuing entity, and it's set up in a favorable, flexible jurisdiction like Delaware or Singapore. SPV2 issues the tokens and distributes the income to investors worldwide. It's just a beautiful way of bridging the gap between local physical reality and borderless global digital liquidity.
Part 5. DePIN, the infrastructure frontier. This brings us to a really exciting space, decentralized physical infrastructure networks, or DePIN. What's absolutely fascinating here is how it completely inverts the normal sequence of tokenization. Usually, an existing asset gets tokenized, right? But DePIN? It uses token incentives to fund and build massive infrastructure projects from the bottom up. So, instead of a single telecom company taking on billions in corporate debt to build out a network, DePIN crowdsources the whole thing from thousands of independent operators who just buy hardware and earn tokens for providing coverage.
And these aren't just ideas. These are live deployments happening right now. Helium pioneered this whole model for wireless and 5G. People basically host a small radio device, provide coverage, and earn tokens that are tied directly to network usage through this brilliant burn and mint equilibrium. Then you have the render network, where individuals rent out their idle GPU processing power for 3D rendering and AI training. Filecoin does this for decentralized data storage, while Akash and IO.net do it for cloud computing. And here is the crucial part. These tokens are not company stock. They are a direct mathematical claim on the actual network usage revenue.
As you'd expect, the market's reaction has been completely explosive. The DePIN market capitalization sat at roughly $5.2 billion back in 2024. Fast forward to September of 2025, and it rocketed all the way up to $19 billion. That is a massive amount of institutional-scale capital rushing into decentralized hardware networks in basically just a single year.
Now, valuations are one thing, right? But actual cash flow is another. $72 million. That represents real, non-speculative, on-chain revenue that was paid specifically for network usage in the year 2025. People are actually paying real money to use this decentralized data, storage, and AI compute. In fact, research estimates that hardware operators in these mature DePIN networks can see annualized returns anywhere in the range of 15 to 25% on their hardware investment, and that is driven purely by real-world usage.
So applying this exact same underlying technology to the physical energy grid reveals just an incredible opportunity. Think about it. $1.9 trillion was invested globally in renewable energy in 2025. Today, we're seeing platforms offering fractional ownership in specific solar farms. An Oracle automatically reads the metered energy output of the solar panels, and a smart contract instantly distributes the revenue right back to the token holders. Just by eliminating traditional administrative waste and overhead, McKinsey estimates these smart contracts could boost annual returns on infrastructure assets by 2 to 5%. That literally equals hundreds of billions of dollars in newly unlocked value.
And finally, Part 6, the untokenized infrastructure reality.
Now you might be wondering, okay, if tokenization is so efficient, why on earth aren't our major toll roads, water utilities, and airports tokenized yet? Well, the reasons are entirely structural. It's not a technical problem. First off, you're dealing with government counterparties and these decades-long, highly complex concession agreements. Second, the financing itself is just this multi-layered web of municipal bonds, tax equity, and infrastructure loans. But perhaps most importantly, and this is a big one, the massive institutional investors who buy these things, like pension funds, they actually want their money locked up. They have liabilities stretching out for decades, and they rely on the illiquidity premium they get from locking their capital away. For them, the friction is actually a feature, not a bug.
But here's the thing. The technology to tokenize a toll collection system and distribute the revenue to thousands of wallets instantly, that already exists today, just as we've seen with real estate and DePIN. The only barriers left are legal and institutional. So, as this technology inevitably continues to consume the physical world, making everything around us machine-readable, it really makes you wonder, when will you own a fraction of the toll road you drive on? Thank you so much for joining me on this explainer. Keep learning, and I'll catch you next time.